Friends, this is Martin from Secrets, the channel for learning about trading and investment. Welcome to Markets Tomorrow, the daily stock market analysis, where we look at the technical charts and then try to understand what happened in the market during the day and then plan for a better trade for the upcoming day that's starting from tomorrow, March 19, Tuesday, 2024. Yeah, another day of consolidation on the indices, and Banknifty was closing negative for the 7th day, while Nifty is consolidating since last 3 days after the big fall on Wednesday. Let's try to understand more from the charts. We'll come back to this wrap up. You can take a screenshot if you want. But first, the charts. We are going straight away to the technical charts of daily. Remove all these things, and then you see that the candle is a small body. It's a small body, means it's indecisive, and it has been a small body since last 2 days, and also it is the third consolidation or inside bar candle after the Wednesday's big red candle. So it indicates absolute consolidation since last 3 days, and it is having a bearish bias because it's still below the 20 exponential moving average. And if you look at the charts further, you can see that the price has taken a retracement after from the all-time high. It has been 2.75% of retracements nearly so far, from the all-time high at 22,500 above, and retracement has a lot of scope to come down till the 21,500, and it also has a hope of scope for going up towards the 22,800, 850 levels if you consider the trend line parallel channel. Nifty, the candlestick formed is a pin bar. It's also sometimes you can call it as a hammer also, although the big size on the top is a little extra. And these kind of candles are small body, therefore it's indecisive. Plus the long wick size indicates a sudden dip and then bounce up. The support zone is clearly the 46,000 zone where the 100 exponential moving average is there. I think it did manage to close above the 50 exponential moving average, but stiff resistance below the 20 exponential moving average. And the pin bar could turn out to be a reversal, not confirmed, from the existing trend, which is downside. This pin bar, if the price is moving above this candle's high, then there is a potential that it can be a reversal towards the previous swing highs, that is 48,160. So pin bars could be reversals. It is indecisive right now, but pin bars, it could be reversals if confirmed, only if it's confirmed about the price high. If you look at the Bank Nifty, it has been much more volatile than the Nifty. It has been struggling to stay in this blue trend line channel, and it managed to slip down into the yellow channel below multiple times, and then even today if you see, it has bounced up from exactly at the bottom of this trend line channel, the blue one, and also the inside trend line channel, this yellow one. So this is a confluence of two trend line channels, and it is a bounce up from the trend line channel bottom, and that's probably indicating that it is a previous resistance zone, which may be acting as a support now, where a change of priority bounce up may be possible in the Bank Nifty. Because the bounce up has happened, a pin bar is formed, non-confirmed reversal potential, and it bounced up from a support zone. Change in priority bounce up could happen. Remember the higher high, higher low pattern in this channel. Clearly you can see it is still maintained, and it gets breached at 25,600 below. Nifty also is having a higher high, higher low pattern, but it can breach very soon if 21,800 is breached. So clear consolidation in the Nifty and 7 days of decline and then a bounce up with a pin bar from the supports, right? You can also see that there is a trend line inside the red one, and the Nifty price is consolidating exactly there. Banknifty price also is consolidating at the bottom of it. So far the correction has happened, and anything from here on the downside could be a deeper one. And if it managed to consolidate there, and some event comes in next few days from either from the Fed or any other news comes in, it could easily start its journey back towards the all-time high. There is good probability because corrections happened, technical correction, a very beautiful correction has happened, and any breach from here would mean a breach of the price action in the short term, and then it would extend more. But if it consolidates for some more days till an event support comes in, it can beautifully gather strength to move further up to all-time highs once again. Remember, Banknifty had gone as close as 500 points away from the all-time high, so it's possible. On that positive note, before that, let's just look at the Bollinger Bands also. You can see that it's contraction that's happening in the Bollinger Bands. On the Nifty and the Banknifty is the Banknifty that you see, but it's having a bearish bias because the price is below the median of the Bollinger Bands. So Bollinger Bands on the daily indicates more sideways moves are possible. Similarly, Bollinger Bands on the daily on the Nifty also is showing sideways contraction with bearish bias. So sideways moves expected ahead. Let's now come back to the wrap up things. Yeah, flattish close, small body indecisive candles, and with a mid of 34% retrace, 34% rally, and the correction so far is just 2.75%. Earlier retracement was 4.5%. So it is managed to close about 22,000, right, after having showing signs of losing that since last several days. It managed to consolidate and then climb above 20,000. Banknifty also flattish, absolute flattish close of 18 points negative, that's all, with a potential for reversal and amounts of further change in variety possibility, but could not manage to close above the 47,000 big rounding number. Correction is extended to 4.5%. Early correction was 8.5% after 26% of the rally from this previous swing lows. Now we look at the support resistance level from the 1 hour charts. You can see that 22,000 could be a major support, and if that is breached, it goes to 21,860, which can be a good support for the Nifty. And resistance on the Nifty could be 22,200 previous swing highs, and then 22,447, 22,450, that zone would be the resistances for the next day. Bank Nifty 46,000 can be a good support. That's where it went down and then bounced up today. And after that, if that is breached, it goes to previous swing lows at 45,661. On the upside, resistance can be 47,000, and if that's taken out, then it can go as far as 47,359. That's support resistances. And then let's now look at what's in favor of the bulls and then what is in favor of bears. Bulls first. We have the Nifty having an inside bar for the third day. That's absolute consolidation and not a breakdown. And it's a flattish close in the C, but there is a potential for it having found a bottom. Consolidation continues, it's not bearish yet. Price action also remains bullish, higher low pattern. We have seen that. One leg is in the sideways, not bearish in the short term. The VIX is flattish, not rising up when the market is falling or correcting. Still less than 14. So it could, because it could break out of the 15 plus once again very easily, and then as the election dates and results and outcome comes, it can shoot up much beyond the 20. That's time when we have to be extremely cautious. Well, the bands is in contraction mode and not an expansion mode on the downside. So it's having a bearish bias, but its sideways potential is what it's saying on the daily charts. Major industrial indices, sectorial industrial sector indices are showing green today, except for the IT and the FMCG today. Otherwise, if you see, none of them are bearish except for one reality sector, which had taken a deep cut of nearly 10% the previous day. But otherwise, all the other sectors are maintaining the sideways momentum, not bearish. Major heavyweight stocks are all in the sideways momentum, not bearish. Heavyweight stocks are that stocks that contribute maximum to the indices, like the ITCs, Reliance, the ICICI Bank, the HDFC Bank, and Kotak Bank, and Lanti, and all this. Like, so they're all maintaining the sideways momentum for now, not bearish momentum. If you think of if you look at the upper and rest of the futures, you can see that it's a long build-up that has happened today. Brokerage is not bullish, but it's neither very bearish, right? It's 0.7778 on the indices. As of now, we have another couple of days for the expiry. This week is a shortened week. Truncated week, and expiry comes before that. But anyway, what's in favor of the bears since the Banknifty had 7 consecutive days of downfall, negative. Today also it closed flattish but negative. And you cannot ignore the fact that bounced. It in fact breached the 100-day MX today. $20 and $50 it breached, and it breached $100 today, and then bounced from there. But the 100 MO had got breached, and you have the 200 expression moving average separated from moving average side for the bank. You left it out there to be breached after this rally that moved up as close as 500 points away from the all-time high. So the trend indicator index is showing it's bearish, and the bearishness is rising up in strength on both the indices in the short term. It's in favor of the bears. Momentum is sideways, but it's falling momentum. It's not rising like Nifty. So that's for the Bank Nifty, it's falling. That's a concern. And the heavyweight stocks, they're all sideways. It's fine, but today it closed red. All of them closed red, except for the Reliance and the ICICI Bank that is trying to hold the market. The foreign institutions had been selling 2,000 crores again, and they had been inconsistent and never been biased in the cash segment for a very long time. Although some entering buying comes once in a day, and they sell double of that. So last week we had a 4,000 crores of buying in the cash market, and after 2 days 4,500 crores of selling came. Likewise today, after another 2 days we have 2,000 crores selling. So selling continues in the Fyers, and we'll have to wait probably for the Fed outcome to come on Wednesday for the Fed to probably turn to buying. Never know. So, but unless and until that happens, the AS has been buying consistently. Today also 2,200 crores of buying the cash happened. But how long would it be enough for the market to steadily rise up? Imagine what would happen if the foreign money also is coming in. Market can go go like a rocket. But that's not happening, as well. That remains a concern, and it's in favor of the bears. So it's probably because of the valuation concerns, other fundamental reasons, but that remains a concerns in favor of bears. Sometimes a red, and it's also at the all-time heights. It's having a similar reaction like ours, and then a probability of a retracement that could come at any time. So it's at the very top, and there is an event also upcoming. So keep a close watch there. Dollar is showing flattish green. That means it's rising up. It's 103.45, and the rupee remains weak near the 83 central bank control since ages. Crude oil is spiking up, and it's above 80 plus, and then moving up, and it's a concern for an oil importing country like ours. Gold has been all-time high and continues to be at the top and rising up. It's showing some green, which is a concern, even though gold is a hedging instrument for equity and various other commodity markets, and import, export, and all that. But the fact that money is shifting towards a safer haven from the equity market, is that what is happening is the concern that remains. Now the verdict is it's consolidation that's happening, as if you look at the charts, technical charts, and momentum is sideways, not bearish, and Bollinger Bands also indicate, price action also indicates the consolidation pattern. The higher high, higher low pattern is still not bullish. That's the bullish pattern. If that's breached, probably you may have trouble from price action from price action point of view. Bank has declined for the 7 consecutive days. It's a concern, but it bounced beautifully from the channel 100 exponential moving average, from the channel bottom as well as the 100 exponential moving average, which is flat. But it bounced up and closed positive today. The Nifty, which still could not hold on to the expression moving average. So far as not in buying mode. We already seen that. For the investors, just to wrap it up, so the word is very clear. It's sideways consolidation happening. Levels are very clear. It's at a crucial point on the downside, having negative bias because of various reasons from price action on that. But I mean, it's a probability that it has found a bottom somewhere here for this, and that is very good probability that it can bounce up, right? But it may continue to consolidate like this probability that till expiry date, and it will be giving a decisive outcome for sure. Thursday will be deciding day. Nothing much may happen before that, hopefully. So for the investors, it's long-term quality stock investment opportunities when there is a dip, and then probably you can play the options for a regular rental income using certain strategies that's listed in the playlist about that. For traders, market is not directional anymore. It is maybe spiking, but it is not directional. It is sideways. So you have to play the non-directional thing until then if you're on the derivatives. But play it safe until the VIX spikes up too much. No, and then you can play it safe with option non-directional strategies or spreads. Fed demand is coming. VIX can spike up. Premiums can spike up. Market can be very volatile, so be careful about that fact also. Not yet taking portions, but yeah, risk is the only thing that is in our control. Risk is all prone to failure anytime when there is black swans or things like that. Market surprises you anytime. Markets can do that always, but we can study the support resistance levels and then bet on it based on our risk appetite. The risk. Thanks for watching, and that's all I have. Market is at a support zone, crucial support zone. Breach of that would be dangerous, and there is a probability that it can move up, having done a very small correction since last 6-7 days, right? And there is an event risk also there, very close by on Wednesday. Keep that in mind and play it. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.